Hi, my name is Darren. Some may know me as the bird guy or the guy with too many kids. But what many people do not know is I'm a financial planner with a lot of interest in making my money work harder for me. Subscribe to my channel if you love money just like me. Hi guys, and welcome to my first channel, Let's Talk Money. So today I'm going to share with you my favorite topic, which is what do we do when we have spare cash lying around? Oh my god! Wow! Okay, so the first thing that we can do when we have some money that's lying around is we can always put it into safer things like a savings account, and there's also the option of a fixed deposit. But if you are someone that has a little bit more risk appetite, well, you can always put it into something a little bit more risky, right? So what are the riskier options that we may have? Well, the first thing that we can actually explore will be stocks. Stocks is one way to do it, and of course the second thing that we can explore will be unit trust. The third thing that we can explore will be property, and the fourth thing that we can explore will be my favorite topic, which is options. Okay, I'm going to break down everything in detail for you. Okay, and let's talk about the more safer things, which is our savings account. A savings account is definitely the best way that you can do to put in spare funds that you may have. However, the downside of a savings account is the interest rate. As we all know, bank accounts give very low interest rate. Usually it's around 0.01 to 0.05% per annum, and this is really not enough if our main intention is to beat inflation. But of course, why do we put money into a savings account? Because one thing, the flexibility. We can withdraw our money as and when we want. And the general rule of thumb is to always have at least 6 months of your monthly expenses in a savings account, because we never know what may happen unexpectedly. And if that thing would happen unexpectedly, at least we have money that is set aside for that emergency situation. Of course, there are some ways that you can grow your money through a savings account as well. As you know, there are banks that give accounts whereby you fulfill a certain criteria and they'll give you bonus interest. For example, Standard Chartered has a bonus saver, DBS has the DBS multiplier account. Okay, the good thing about these accounts is the interest will be a little bit higher. However, you have to fulfill certain criteria in order to earn that extra interest. And the thing about this savings account is the interest is usually capped up to a certain amount. So what if you have more than that certain amount? What is next for you? Well, I got news for you. You can also put it into a fixed deposit. So fixed deposits are good ways to grow your money as well. They are very safe, and the interest that you see is fixed. Okay, so fixed deposits are offered by the banks, and they tend to give around 0.6 to 0.8% per annum. Okay, which is slightly higher than what you get from your savings account. Okay, especially if you have a large amount that you want to put in, for example, $500,000, $1 million, etc. But what if you want something that gives you a little bit more interest as compared to a savings account or a fixed deposit? What are the options for you? Well, it really depends on your risk appetite. If you have a larger risk, then you can always explore stocks. What I like about stocks is, of course, if you choose a good company, then you can earn a potentially higher interest as compared to your savings account or the fixed deposits as well. But the downsides of stocks is, if you were to choose a company that does not do too well in the long run, okay, then you may potentially lose either part, if not all of the money that you set aside. So we always try to ensure that we do our due diligence, and this is done by various things. We can always use fundamental analysis to analyze a company to ensure that this company is fundamentally sound. You're buying it at a very good valuation. And you also want to look at the technicals of the company, because ultimately it's good to buy it when there is key support. So at least you know that I'm buying it at a pretty decent price. Besides stocks, let's say if you are someone who's not very investment savvy, you know that more or less you want to buy into a certain country or a certain sector. What is the option for you? Well, you can always buy a unit trust. So what I like about unit trust is really a basket of goods. Okay, it's managed by a fund manager. Okay, and that fund manager will use whatever funds that is pulled into that fund, allocate into companies that he finds fulfill the required fund mandate. Okay, so the good thing about it is you don't really need to do much research. You just need to trust that the fund manager is doing his job. Okay, and then you can just go on with your daily life. And the good thing about unit trust is you can buy it from online platforms. In the past, the only way to buy unit trust was to buy it through banks. But the thing about buying through a bank is there's always that 3 to 5% sales charge that you have to pay. So let's say if you put in maybe $50,000, $100,000, you have to pay 3%. That's like $1,500. So before your investment even earn money, it's already down $1,500.
Stop it. get some help.
Well, you don't really need to go through that hassle anymore. There are now online platforms, for example, Fund Supermart and DollarDex, that allow you to buy unit trusts at a very low. In fact, DollarDex does not even charge you any sales charge. What do they earn? They earn from this thing called trailer fee. Okay, so basically they do not charge you anything, okay, but they earn the trailer fee from whatever investment is inside their platform. Of course, besides unit trusts, what most people like to do is they like to invest in property. As you know, Singapore is land scarce, so property tends to go up over time due to the scarcity of land. But please note that by investing into property, you're putting a large amount of capital, okay, into one asset. And in the event if the property market were to crash, there's always a chance that your portfolio may be hit. And not to forget that property is also a very illiquid investment. If you need the money urgently, you may not be able to sell it in time.
何? お前はもう死んでいる。
There are always miscellaneous sales charge that you need to take note of. There is always that buyer stamp duty, seller stamp duty, and also agent fees. We have maintenance fees, okay, and you have to manage your tenant if you want to rent the property out as well. Okay, so as promised, okay, the last way will be through options. So options is definitely my most favorite way of investing, and as promised, I'm going to share with you one way that you can use options to have a passive income, and that approach is called a cover call. If you are someone that's very new to options, well, I would recommend that you check our options trading course later. So what is a very good way to earn passive income from shares? You can do that through an options trading strategy known as the covered call. A covered call means that you own 100 shares, okay, and you sell a call against that company. And the good thing about having a covered call is by doing so, and if you are selling a call every month, you can earn that passive income month in, month out. And this will give you monthly stream of income from options. And don't forget, your stocks will also give you dividends as well. So you'll be earning 1, dividends from the shares, and 2, the sold premium from your sold calls. If you're not sure, do remember to check our course later. I hope you guys enjoyed this short sharing. See you!